Will higher mortgage rates halt the housing recovery? Here to talk about that is Bob Walters. He's the chief economist at Quicken Loans. Welcome, Bob.
Thank you.
All right, new home sales are at a high. The Case-Shiller keeps moving up. So what's the state of housing right now? How hot is it?
Well, I think it's very hot, which is great news, and I think there's a number of things driving it. Home affordability is as high as it's been in 20 years. It's come off a little bit as mortgage rates have gone up, but it's still historically very high. Home values dropped a lot over the last 3 or 4 years, as everybody knows. That makes homes very affordable, and as the employment picture brightens, albeit slowly, and wages increase, albeit slowly, that's better too. So that's going to continue to drive housing. Plus, we've had enormous pent-up demand. Lots of people have been living with their parents or doubling up, and so this is a natural occurrence that people are now buying more houses.
Last I checked, the 30-year fixed mortgage rate is around 4.5%. How high does it have to move up before it really derails things?
That's a great question. I don't know if there's a magic amount. I would imagine a percent and a half higher from here would start to really affect things. But again, there's other things, other factors that go into that. What are happening with wages, where are home prices? But we could absorb another 0.5% easily, maybe even another full percentage point pretty easily without home prices really tamping down, or without interest rates tamping down demand.
Can we absorb more supply? If you look at the home builders this summer, they've really cooled off as the housing market has heated up. You look at Lennar, Pulte, Toll, these stocks have come down over the course of this summer. So what kind of an indicator is that?
Well, I think they also had a run-up, right? So I think the market was looking forward and saw some of the resurgence. So I don't know if I put too much stock in the cooling that's happened right now. Really, more supply would be a good thing. The challenges we have right now is that people in many markets are actually competing for homes. They're having a hard time. Cash buyers, especially in some of the lower priced homes, are crowding out first-time home buyers. So a bit more supply as that first-time home buyer from the past moves up would be a good thing.
What are your expectations for mortgage rates if and when the Fed starts tapering? There's a lot of tapering talk right now about it starting in September. So what happens to mortgage rates if the Fed buys $65 billion in securities as opposed to $85 billion?
Well, I think certainly there'd be some negative effect, but a lot of that's already been priced in. Certainly when the Fed began to signal that the end is coming, we saw that's what brought us up that 0.5 or 0.75% over the last number of months, was the market looking forward. So I think when some of it actually happened, much of it's been priced in. Although clearly the markets are going to have to wrestle with what's equilibrium, but I don't see a huge spike when that begins to happen.
Finally, let's talk a little bit about Fannie and Freddie, because the president has been speaking about Fannie and Freddie this week. He's talking about winding them down. Will that ever happen?
Yeah, I think it will. I think just politically, I think it needs to happen. But Fannie and Freddie have and do provide a huge lift and a huge support for the housing market. And I think one of the things that they provide, and one of the things that's been really important, is that explicit guarantee on mortgage-backed securities. So most people don't realize that, but what that does is that brings a consistency to the market and allows there not to be regional imbalances, and also protects when you go through difficult times to see the supply of funds dry up. So I think that explicit guarantee needs to be there, but clearly private capital needs to be in front of it. So there will be successors to Fannie and Freddie. It won't be called Fannie and Freddie, but there will be similar types of constructs that will be in place.
Thanks a lot.
Thank you.
Thank you for watching The Street.